What's good, everyone? So today I'm going to break down exactly how I find my daily and weekly bias in the Forex market. This is a very important part of trading because it pretty much sets you up for the week before you take any trades, so you know exactly what you're looking for before you trade, basically. And this is not a complicated process at all. When I first started trading, I made it way too complicated with all the different confluences, listening to other people, etc. So I'm going to break down exactly what I do to find my bias. So what I do every Sunday when I'm doing my Sunday analysis is go into the highest time frame I use, which is the weekly time frame. I don't use the monthly time frame just because I think it's too high of a time frame for what I do, which is day trading. So pretty much I go into the highest time frame and just work my way down. So on the weekly time frame, you can see that we had these two big bearish candles, but then we tapped into this weekly fair value gap. On the daily time frame, we have been consolidating for the past 2 months here, as you can see from this support and this resistance. We've just been going sideways for the past 2 months, and we finally broke out of it right here last week. Doing that, after we broke out, we also tapped into this weekly fair value gap. So after tapping that, I go down even to the lower time frame, to the 4 hour. And on the 4 hour, you can see that we're getting a pretty nice reaction, and we're getting some very nice hourly structure coming out of that POI. So that's the first thing I do, is go onto the weekly and daily time frame, see where price is heading, and then mark out any available POIs that we can react from, and go onto the lower time frame to see if we are reacting from them. So from this weekly gap, we can see that we are reacting. So normally I would continue to be short in the DXY because we broke out of this consolidation and we broke below this low here, which pretty much gave us our change of character right here. So we got a close below this low. But the reason I'm not going to be short is because we left this new week opening gap right here, which is a very strong draw on liquidity. It almost always gets filled. So that being said, what I do want to see is price come up and fill this new week opening gap, so there's no gaps left up here, and then expand down towards ERL, which is this low down here. ERL basically stands for external range liquidity, which is the lowest point in this range. So on the hourly time frame, you can see we're creating nice structure. So what I do then is just get some POIs in them ranges. So I got the fib out from this low to this high, and we are now in discount of that range. And we also have this POI, this 1 hour demand slash order block, which we tapped right before Friday's close. So what I want to see is a reaction on the lower time frame from this POI to then push up towards this high and then up to fill this new week opening gap. And since we broke out here on the daily time frame and we got this change of character, after filling the gap, I want to see a bearish reaction from this gap to then push down towards ERL. So I'm going to show you exactly my plan for the market next week, which is going to be something like this. So get reaction on the lower time frame here, push up to this high, fill this gap, react from there, and push down to ERL. So yeah, the main things I look for are POIs, higher and lower time frame trends, which is the weekly, daily, 4 hour and hourly, and then obviously draws on liquidity, which in this instance is a new week opening gap, but they're obviously not always going to be there. So if it's not a new week opening gap, I use ERL, which is this low here. So yeah, that's basically how I find my daily bias. It's not complicated at all, just the higher time frame trend, POIs, draws on liquidity. I hope this has helped some people because I know a lot of traders overcomplicate their bias. I was there, I did that at the start, but it really can just be as simple as this. I'll see you in the next one.